and YouTube, or Google for National Real Estate Network YouTube. There's a whole channel with tons of videos on there with a lot of them are short, good advice, how to get started wholesaling.
I just put it into the chat box for everybody.
Yeah, great. Thank you. And if you've got any questions, I've been doing this since like 1987 as a real estate agent and an investor. And I bought and sold 3,500 properties. I've made tons of mistakes. So if you want to talk to somebody that stepped on a lot of landmines, I'll be glad to give you some help.
And they are doing what Pompeo won't do. Congratulate Joe Biden.
Hey.
From Canada to France to Germany to the UK to Australia to India to Sweden to New Zealand. The list goes on and on and on. And yeah.
Okay. Yeah, Mark, you mentioned stepping on the landmines. It's usually good to learn from others, hear the stories.
Yeah, that's my whole point. Yeah, don't do as I did, but I can sure tell you where not to step. I see Maureen joined too. That's cool.
And it looks like Emmett joined us, and John. Everyone, in the chat box, I put a link to Mark's YouTube channel in there. There's some videos on there that everyone can take a look at. And earlier we were talking for new investors, definitely want to reach out to your local RIAs. Facebook has a lot of local groups out there and some of the other social platforms, but that's really where you're able to see some of the other local investors out there. But I think actually quite a few people on here. We can get started if everyone's ready, and then feel free on the video presentation. You can raise your hand, I believe, in there, or you can type a question into the chat box as you have it. And we'll try to address everyone's questions and go from there. And really today wanted to cover really all the different aspects of real estate investing out there. And we can really kind of focus on specific questions as you have them, from setting up your business, acquiring the property, different tax strategies, and then all the way through selling or flipping or doing an exchange or something on that. So that's kind of the focus we were going to plan on today, and go from there. And then at any time, feel free, anybody reach in with questions, but I think we have a lot of new investors in the group. One of the questions that Mark presented earlier, I think before some of you got on, was really how to set up your business. And one of the things I always stress, let me see, I have a question, but okay. So, but one of the things really as you step into being an investor, getting your business structure set up, and I like to stress your business structure, meaning entity plus your books and records. Usually that's going to mean an LLC or an S corporation. And really, some of you that are not in the state of Michigan, you're definitely going to want to navigate through those territories. Each state, to register something such as an LLC, has different registration fees. Michigan tends to be a cheaper state of about $25. Other states are a little more pricier. So an LLC is not always the best answer, but at least really starting to network and have the team. So when you find that deal, you're getting ready to close on it, you can have the right structure for you. Reason I bring that up, a lot of you, I think, mentioned really getting into buy and hold investments. And as you start to acquire properties, having an LLC structure is going to give you different tax advantages to run your business. And then really being able to separate your books and records. I know a lot of new investors are paying out of personal accounts, but really getting into setting up a good accounting system. And that means a business bank account, business credit card, some type of accounting system such as QuickBooks. I have some clients that actually use a spreadsheet and do a great job. I have other ones that use some sophisticated system and it's a mess. So really, a lot of times I tell clients or potential clients
Do you
always
want to
reach.
hear Alcini or no?
Hello? Okay. Sorry about that. But a lot of times I always tell clients or contacts and network friends of mine, reach out. I do offer consultations with people. Check me out at cpanerd.com, and able to book a more of a private consultation, discuss what's going to really work best for you. But right now, as we go through everything, feel free, enter questions and we can go from there. So I think one of the things we really wanted to cover tonight was really getting your business set up. And briefly discussed setting up an LLC. One of the things I usually advise, talk to an attorney or at least get the advice that's going to work for you. And I say LLC because that's more of a blanket statement. I do have clients that flip a lot of houses that an S corporation makes sense for them. But really feel free to reach out and really come up with that strategy. But I think from what I can see, we have a lot more buy and hold type investors in the group or people looking to get into that. One of the things with an LLC, it starts to afford you some legal protection and segregation of your assets and activities on your tax returns. But with that, I still advise always talk to an attorney. I'm not an attorney and don't offer legal advice. I know Mark's disclaimers usually at the beginning, not an attorney. I'm offering tax advice of general nature and everybody's situation's different. Always seek out a professional. I don't think we disclaimed that earlier, Mark. And but we're both disclaiming that this is more of a general nature and go from there. Okay, nobody's coming in. One of the questions I had was about some of the tax changes coming up in the new year. Right now, with the current election situation, and there's a lot of uncertainty right now. Not entirely sure what's going to happen with next year's tax changes. Right now, we have record low capital gains tax rates and income tax rates. I've seen some proposals from both candidates. They are different. There's quite a bit of differences in them, but not really sure with everything as far as the House, the Senate, and then the presidential election, how everything will actually turn out. So I would say most likely we might see increase of income taxes and capital gains taxes would be my best guess. But again, I'm going to focus more on what everything is based on today. I can see certain advantages going away, but again, until it happens, not entirely sure. So let me see. So I think it's a little tough to really project next year's rates in that. Hope that answered the question. I know they would be substantially higher with one candidate versus the other, but there's a number of other factors in there. So I just saw a hand go up. I see a hand up, Maureen. Is there a question?
I do have a quick question because you were talking about establishing your LLC.
Okay.
Now, I've seen where some people establish their LLC in other states like Delaware or Las Vegas or, Nevada. Is there a benefit to that? And if so, do you still need to file taxes locally?
Okay. Great question. I see a lot of people with, and I have that come across Wyoming, for instance, has some privacy laws. Nevada has some privacy laws. Delaware is more public company friendly. You'll see that. So I hate to say it, I see a lot of gurus talking about asset protection and filing in those states. But if you take a Wyoming LLC, I'm going to set that up. I'm going to pay their fees. I still need to register in Michigan as a foreign business doing business within Michigan. And then I still need to register within Michigan. So I'm going to end up paying Wyoming and Michigan fees. If I'm a foreign business, I'm also going to have to hire what's called a resident agent within the state of Michigan to represent me. And I personally believe you're overcomplicating it by getting into these other states, unless you have some complex structure. And attorney friends of mine tend to agree. But my largest investors have Michigan entities that are investing in Michigan. In any state, wherever your property is located, if I have a Michigan LLC with Ohio property, I'm going to have a tax obligation in Ohio, and I may or may not in Michigan. So it's more where the activity's done, not the state you're registered. So you're not escaping taxes. A lot of it's pushed, I think, for asset protection and legal protection, but really, I think sometimes it's overkill, and certain states have exorbitant fees, such as California. It's $800 a year for an LLC, plus the $25 a year that you have to pay in Michigan. So you haven't really achieved anything in that situation. So I usually just recommend clients to set up a Michigan LLC and go from there, if they're investing in Michigan. Did that answer your question, Maureen?
Yes, thank you.
Okay. And then a lot of times I'll have clients that are located in Michigan that will have properties in other states. Many times they have a Michigan LLC because the cost to set that up is cheap. And then they'll have their out-of-state business still do the proper registrations down in South Carolina for their rentals. But if they ever discontinue that activity in South Carolina, they still have a Michigan entity. Michigan also allows them to exclude the out-of-state income, where other states such as California and New York aren't as tax-friendly as Michigan is.
Hey, Frank, are you also recommending that they open an LLC per property for protection? Or would you suggest them opening up like a parent LLC and then just having the properties under that one LLC? Just curious.
Personally, I would say more of an LLC for, it could be multiple properties. I have an attorney friend that recommends 4 to 5 properties per LLC. I would do it personally more on function. If I had 5 properties on one street and then on the other side of town I had 10 properties, I'd probably have 2 LLCs for that.
Hi, Kevin.
But it really comes down to each company needs its own separate books and records. So for each LLC, if you were to ever get sued, do you want to have 12 separate bank accounts for your 12 separate properties? So my largest client has 175 properties in one LLC. They have one bank account, one set of books, one insurance policy that they get a great deal. They have one good attorney. So I don't know that there's a perfect answer, but I like it over function. Some attorneys have a certain number, and I would say whatever's going to work for you the best. But if you have 5 properties in an LLC, Maureen and I could be partners tomorrow. She could buy into the LLC and effectively have an interest in all 5 properties. If I have too big of a pool and she only wants to invest in 2, now we've I've got a little different issue. So there might be some transfers if I ever look for future investors. So, okay. Looks like we have a question here from Emmett as far as the tax rate when you flip a property in your name versus an LLC. So, if I own a piece of property in my name personally or in my LLC, effectively, I'm going to come up with my net profit, which is going to be my cost of my property plus all my improvements, subtracted from my selling price and my selling expenses. And then I'm going to end up with my net profit. In LLC or an individual, it's going to flow through at the same tax rate. But really what's key as the LLC, in that situation, if you're running a business, I advise an LLC because as you start to run the LLC, you're going to treat that differently and run that through a business credit card, a checking account, and then start to have a separation between your personal and your business activity. And what's key is not missing any of your expenses. When you're flipping a house, things are busy. If you're doing the work, you're going to be using your own credit card, a business credit card. And then at the end of the year, when you come see me, trying to track where all your expenses are, I say if it's going to be your business, treat it as a business. But now the question is on flipping a property in your individual name versus an LLC. Depending on the number of properties you're going to flip, I usually advise it might be worth looking at an S corporation based on today's tax rates, because a true flip where I just buy a property, I'm going to flip it this month and then sell it, that's what's called ordinary income by the IRS. And in that activity, that's taxed at ordinary income tax rates, which right now the highest income tax rates are 37%. And on top of that, you have self-employment tax exposure, which is about another 15%. So let's say you make $100,000 on that, you could end up paying the 37%, or on the 100, you'd be more at the 22% tax rate plus the self-employment, where an S corporation strategy might be able to shield you. But I always say don't put the cart before the horse, because if it's a small deal and you're going to make just a small profit on it, an LLC is a little easier to account for and do taxes, where an S corporation, if you end up with one deal, you make $3,000 on it, you don't necessarily need the extra expense of having another tax return done. So another strategy on a flip, because I hear that word used more interchangeably, being a rental property that I buy, I improve, and then before I put a tenant in or after I put a tenant in, I go to sell it to Mark because he comes along, offers me a price on that property. That might be more of a capital gains transaction. And that, depending on the level of activity you're doing, using different entities might be a strategy to help reduce your taxes. And it's really a case by case, because I've had people say they flipped a property, and then when I do a little more digging, I find out that they sold a rental property a year after a tenant was in there. And selling a rental is substantially different than selling a flip. And if you made money, I'd rather you sold a rental property as opposed to sold a flip property. If you lost money, I hope it was a flip, because the losses you get to write off better on an ordinary activity than you do in a capital gains activity. So it's something to really drill down to what you're doing and to the level of activity. But I always stress different LLCs in those situations, because the taxpayer, as defined by the tax code, is really the EIN number, which is going to be the individual LLCs, S corporation, my social security number. If normally I have 10 flips a year and then I have one rental, the IRS could always say I'm just in the flipping business. If I have 10 rentals and I flip one property every year, I won't have a problem. But if I'm flipping 10 properties and have 10 rentals all in my personal name, the IRS could always say that I'm in the flip business when I make money and investment business when I sell properties. They take the position that's really most advantageous to collecting tax generally. So I hope that answered your question, Emmett. I see a question here from Sophie. Hi, Frank. I have a W-2 also as a realtor. And do really can't. Okay. It looks like it's a question on real estate professional status, which real estate professional status is really key. I get this often if you have losses from rental properties. If you have income from rental properties or income from flips, real estate professional status isn't as key. It doesn't really matter, but the losses, if somebody's making less than $100,000 a year, rentals are treated as a passive activity. So that passive activity is limited to only $25,000 a year. So if I have 12 rentals that are generating a net tax loss because of depreciation and improvements, I can only deduct $25,000 a year on that. If I'm a real estate professional, though, I'm unlimited. If I have income in excess of 150,000, I get to deduct zero of that. That's where it phases out between 100 and 150. But then with this question, she has a W-2. To qualify for real estate professional, there's a hours requirement of 750 hours. But when you have a W-2, it also has to be your greatest activity. So if I have a part-time job that I work 1,000 hours a year, I have to have 1,001 hours in my real estate business. If I have a full-time job that I work the average of 2,080 hours, which is 40 hours a week all year, I have to have greater than that in my real estate business. And most people won't have that on a part-time. But now if one spouse, if a couple is married and one spouse has a full-time W-2 job and the other doesn't and works on their real estate business, if the other spouse that doesn't have a job, a W-2 job, works 750 hours in their real estate business and it's their greatest activity, the husband and wife both combined qualify as real estate professional. And if, let's say, the wife is a real estate professional, they have $40,000 in rental losses from their properties, he makes $200,000 a year. If she's a real estate professional, that $40,000 can reduce their $200,000. So it definitely pays to be married if you're investing in real estate and one has a job and one doesn't. But there's sometimes ways to navigate around that. But generally, if the person's single, having a W-2, you generally won't be able to qualify as a real estate professional. Or if both spouses are full-time worker, and they're generally not going to be able to achieve that status. But then I think there is a note here that the W-2 also is a realtor. If you're a realtor, generally you're not getting a W-2, so I'm assuming it's a different W-2. But if you're a realtor and an investor, those hours can be grouped together. So let's say my wife has a W-2 job. I'm a realtor and I have my investment business and my flip business. I can aggregate all those real estate hours together. So another question come in as far as flipping a property with a partner, whether to do it in separate LLCs or jointly. This can start to get a little tricky. Really, I say get it all in writing. Again, if you're ever going to do a deal with a partner, try to get everything in writing. I think a lot of you at different stages are going to go through opportunities. So for instance, I think Emmett sent that out to everyone. If Emmett and I were going to do a deal, we could actually own that property jointly with his LLC and mine. He could own it jointly with me, or one of us could own it, or we could form a new LLC. And I would caution on forming a new LLC just because no need to create another entity if it's a first deal. I would say if it were Emmett and I personally on a first deal, I would say let's own that jointly in the names of both of our LLCs and then see how this works out, but have a good joint venture agreement of how we're going to fund the property, work the deal, and split the profits. If then after we have that relationship and we continue, it might be worth Emmett and I just forming an LLC individually as partners or with our own respective LLCs. We could do that and then be partners. But before you formalize an entity, I always advise maybe just do it as a joint venture. It could be a deal that Emmett owns the property and I hold the mortgage, and then we split the profit, or vice versa. When you do a joint venture, there's really a number of ways to do it. Now, from a tax standpoint, and again, I'd say talk with your attorney on how to structure it, what's going to work best for Emmett and I in that partnership situation. But then from a tax standpoint, if we both own it individually or through our LLCs, effectively, it would impact our taxes the same way. But that's where, again, the evidence of, are we doing a flip for a property? Are we jointly improving a rental property that we're going to sell? And again, it might be worth creating an entity that is investing in investment property, and maybe we can qualify for capital gains versus ordinary income. If Emmett and I were both full-time flippers, but we had a deal that we were going to improve a property, put a tenant in it, and maybe buy and hold it or sell it, we might want to create a separate entity, because that separate entity would be its own taxpayer under the tax code. And it doesn't matter that myself or Emmett are full-time flippers. What was that entity set up for? And that's where the operating agreement many times defines this business is set up for the purposes of investing in improving property, buying rentals. You can usually define it. And statutory case law with with the tax courts is based on facts and circumstances. So if Frank and Emmett LLC is an investment company and we acted as one, we're probably going to qualify for capital gains as opposed to ordinary income. So that would be something to look at deal by deal, but it's more of a it depends question. That's my favorite answer. Hope that answered your question, Emmett. Next question looks like new investor just bought a 2-family house, lives in one of the units, and talk about the tax advantages. Okay, so you're it sounds like duplex. You have a tenant in there living in one. So right now, you with your tenant, I would say start treating it as a business, because your tenant is giving you rent, but you're also going to start qualifying for depreciation on that building. And really, I'd probably come up with a formula to allocate your depreciation based on, if you occupy 60%, the tenant occupies 40, it might be a 60-40 split and on there. And then some of your utilities and property taxes are going to be allocated to your rental activity. One item to note, a lot of times in-house hacking, I would try to maybe look forward what your longer term vision is with this property. Because if you said you're going to live in this property for 3 years, you're selling it, we might want to look at it differently, because the personal residence exclusion right now, if you're single, you can exclude up to $250,000 gain. If you're married, you can exclude up to 500. And we're kind of playing with the personal residence exclusion versus the investment. If you told me 3 years from now, you're going to move out and put a second tenant in there and you plan to hold this for the long term, I would say set that up as a business and start depreciating that. If it's more of a short term, in 3 years you're going to sell it, we might want to look at that as a short term, not take the depreciation now,